Hello, everyone. Welcome to another episode of the LP Roundtable. Today, we are sitting with Frank Speiser. You might recognize him from his bold predictions on Bloomberg, but you can be sure that these are backed up by data. Frank has been an entrepreneur since the early days of the internet, building useful tracking analytics tools that help define what we now know as digital marketing. Without further ado, let's talk crypto, AI, marketing, and anything in between. Welcome, Frank. How are you
Welcome,
doing?
Frank. Good
How's it
to have
going?
you.
Thanks for having me.
Pleasure. I'm super excited to talk to you about mainly yourself. We don't really have a quick here to discuss, but I'm super curious about what's your journey been like, because we are now working in a digital era where everything is happening online. Crypto is online. Marketing is happening mainly online, and you've been in this space since the beginning. Can you maybe start off with who are you and how did you roll into this?
Yeah, so thanks for having me. A little bit of background on me is I was born in a small town in southern New Jersey. I moved to the next town over and got my first job when I was 12, working on a peach orchard, picking peaches and doing things around the farm. So learned to work pretty early, and I really just started to understand the value of your time for what you get out of it. So if you work an hour in the hot sun on a farm, like you start to understand, like, wow, like the time that you spend to get it and the effort is something that you really need to bake in your calculations. I had that early on in my life, and then played football at my high school. It's a well-known football school in New Jersey called Delsey Regional High School. Shout out to everybody back there. Went to school at Boston University. I went there to play football. When I showed up in between my senior year of high school and going to university, I got really sick, and we didn't know what it was, and it wound up getting into my blood, and I became septic, and I lost 40 pounds over the course of like 3.5 weeks. And so I had to take a medical red shirt, and I couldn't play at school that first year. And I wound up in the dorm that I was living in. There was, luckily enough, a computer lab, and the computer lab there had just started like offering people email addresses. So I got an email address at the school, and then started using message boards and stuff like that. And then, next thing you know, I started getting into like, well, how do I set these up for myself? And then just then in that year, between 94 and 95, all of a sudden it was sort of possible, although a huge pain in the butt, to set up your own website. It started to become a thing where you had to I think you had to fill out a form, not with Internet, but I think originally it went to General Atomic or something like that, General Dynamics. I forget, like, but the paperwork was, we figured it out and we built a website. And that got me into the concept of linking people. And really, from the ground up, I started to understand how peer distribution of information worked and building communities. I got to see it. I'm that old. Like, I got to see it from the perspective of like nothing. And I got to see what worked as people sort of built up. And I've also got to see where it went wrong. And possibly we sort of didn't maybe put enough thought into some things. I got to see, it build up. And I guess, like, if you want to go back to when I was a little younger, when I was 8, I was in remedial classes at school, learning disabled actually. And I was afraid to talk and I didn't want to speak in class or whatever. They put me in this group the way I tested into the school system. And one day my second grade teacher noticed I was following along with how I was reading. And she stopped and she was like, okay, you read. And normally kids in my level weren't supposed to read, but I read, and I always could read. I just was super shy, didn't want to speak because of, circumstances. But so she stopped, grabbed me by the ear, and it was a public school, so you didn't do that. But she was an old school European, she's from Poland, and her husband passed away in World War II. I dragged me down to the principal's office, read him the riot act, had me test, and then when I completed my testing, it turns out I actually tested in the gifted and talented program at the school. And the next week when I went back in school was the first time my school district got a computer. And they wheeled it in the back of the room. And I was the smallest kid in my class, and so they, I couldn't get anywhere near it. For the gifted and talented kids could use the computer first, but I was so small I couldn't like break in. So I read the manual, and then that sort of put me on the path to like when as soon as like people stopped playing the games and it became a little less novel, like I went in and she had a computer. The computer was next to the piano that she used, and I transcribed this piece of music using Basic because you do the pitch, tone, and duration in Basic, and so that started my love of computers. Fast forward when I go to college like that, and it gave me a basis to start understanding it, and then that gave me basically you're bored, you're sick, you can't go anywhere, and you're just trapped there in front of a computer. But for me, it was amazing, and I was opening up all these doors where I was starting to understand that you could reach other people and share information with them, and the concept of sharing the software that you make is just something that I never even considered as being possible. But the concept of money didn't come into it yet. So that's sort of my general introduction to technology and the internet. And I'll just give
Yeah, it's interesting. You mentioned that you see the value of P2P since
Mhm.
95 and the sharing of information and the communication. But if we look at what is Web 2, Web 1, Web 2, Web 3, actually that real sharing economy, P2P, conversations and all of that is more like Web 2, right? So you actually saw even before Web 1 was really going.
Yeah, and am I allowed to? Should I curse on here? Or is it all
You
right
can,
with
you
you guys?
can, go
All right,
ahead.
all right, because I just want to be able to speak freely about
Yeah,
what I
yeah.
saw. But I would say the some of the best things came out of Web 1, and with sort of like the open source movement and stuff like that, where you'd build something and you translate the value for it, but you'd share to a bunch of people. And I'm not a communist, I'm not a socialist, I'm a hardworking, earn what you get capitalist. Like, I believe that you create value for what you get, but I also think that it's not the only mechanism to like build a market for what you're doing. And I saw that pretty early on. Richard Stallman at the Free Software Foundation at MIT, he was pretty instrumental in getting the initial push of these folks. But the problem, and the problem that we've inherited in Web3 almost, is that group of early people, a lot of them, a lot of those early engineers were also like misanthropic dickheads, right? Like Richard Stallman is one of the most important people to computation, but he's an asshole, right? And so like I've only interacted with him a couple times on the forums and stuff like that, but it was enough for me to be like, all right, this group of people, they're limited in basically the way they're gonna see who deserves the use of the technology. And it became self-selecting and clicky, so that when you go to get help on all the message board early on, it was just a bunch of the comic book guy from The Simpsons telling you to RTFM, like read the manual, right? And so you fast forward to where we are in Web3, and we've got a bunch of people who speak in jargon, close people off. They talk about Web3 only concepts. It's such a promising, all-inclusive technology map that we've self-selected to limit based on the culture that we've set up around it. I think that's one of the things we got to fix going forward. But the promise of what it can do, how many people it can reach, and how fast it can move change across the world is there. We've built that piece. So, yeah.
You make the comparison between the early days and the blockchain space, how it is right now, or the crypto space, right? Where right now you have a lot of communities, but sometimes it's more than communities, like communities fighting each other about like, we are the best, we are the best. Was it back in the days like the same as that, where there's like different camps fighting, saying this is how it should be, this is how it should be? How was it in the early days? Can it be compared to how it is right now?
Yeah. So, in a way, the blockchain tribalism reminds me of people dividing into language camps when you're younger. You'd have a lot of people that were C purists in the beginning, and I actually belonged to an early group called the Pearl Mongers. You had a lot of people in that camp that wanted to keep things as close to C as possible, but then you had a bunch of people that wanted to abstract it and make it easier to use. The concept that you keep seeing within the communities that people are wrestling with is, do we make it optimized for the technology path, or do we find a way to make it so it's easier for humans to use, right? And I think that's a healthy tension to get back and forth. But then what happens is people get so attached to the implementation of what they're doing that they stop seeing the value in bringing it to the open market to compete, and you start having these like basically like pre-signaled ways of talking about why something's artificially different or stylistically different than something else. But what you really get out of it is if people use it well, they get good things from it. And so I think what you see in the blockchain space is people trying to optimize for maybe the low latency of the blockchain, the settlement times, and that's good because it's going to help solve certain use cases. But like all the ERC20 chains that are fighting each other, I don't understand why they're doing that. Like there should be a whole lot more effort for cross-chain compatibility and building things that can go across it, because Web3 is not a big enough audience that you need to have that gunfight yet. We should be finding the best and easiest and most portable ways to cooperate with each other. It's too small to fight over the pie. This is a symptom of a poorly constructed economic system right now where we don't have a capitalist market. Like everybody says, you like, well, that's late stage capitalism, which is horseshit. Like that's not late stage capitalism. What you see right now is corporatism or fascism or whatever it is that like, if you can change the price of $1, right, in terms of like the hour that it took to the amount of time it takes you to get the dollar, right? If you can change that and change the basis of exchange, it's not a capitalist system, because I didn't consent to this economic exchange. I went into it with one expectation and the actual rules shifted while I was in the middle of the, so, you look at what we can correct with blockchain, and it's that you can enter into locally scoped agreements with a community of people, find a fair set of terms that you both agree with, set a medium of exchange that could possibly peg to time or whatever you consider the most valuable thing that you fairly want to exchange, until we figure out how to stop dividing each other up into small little camps and fighting over the scraps. You'll just have the big economic system piecing off little breadcrumbs to Web3. Like it, until we find a way to sort of invade their economic systems and make it better and outperform them with, leveraging coordinated community movements and stuff like that. Like I think you'll always just be outgunned. So it's like one of those things where, like, yeah, you see a lot of the cultural problems from those early days in the Web3 space, but they don't really need to be there as far as I'm concerned.
So Frank, I hear a lot of this concern that we're a bit on the wrong path, maybe even in the global economics, that in a way we should be mature enough as a society to move into a more fair and free economy where every stakeholder has its valid contribution. But I think what I'm lacking a bit is what is the direction to take. So do you have your own proposal where you understand, okay, if we tweak that aspect or if we calibrate something differently, we can actually move towards the Web 4 era where this is more fairly set up?
That's a big question, man. I'm just some dude, right? Like I'm not really capable of giving the all-encompassing answer. But what
I would say, before we jump into where do you see it go, maybe we can form the answer a bit more like, how come that we are not getting the system working well? What are the reasons that can be solved to go to a better industry? Is it misaligned incentives? Is it greedy builders? Is it something else? Which parts of these issues can be fixed to get to that better Web3?
Yeah, so we're gonna actually answer both these things. I think part of the problem is, the way we've introduced, so the early days of Web3, like Bitcoin, like I started buying Bitcoin in 2010 for the reason Satoshi put in the Genesis block. I was actually writing for an economics site called Mises.org and the sort of like public facing part of the Austrian economics movement called LewRockwell.com. Guys like Zero Hedge come out of there, and we all recognize that the bank bailouts, the quantitative easing from the Lehman Brothers meltdown and the resulting fixes that they put in the economy were set up to reward people who had early access to the capital. And it took and diluted the purchasing power of anybody who made good decisions in that. So, I'd always understood, as I was poor growing up, right? Like, and And I just understood that, every time they raised interest rates, people around us lost their jobs. And every time they dropped them, people had eventually a year and a half later, maybe had a little bit of money, but then they locked off the thing again. And I understood like, oh, what they're doing is they're just changing like the purchasing power of what people have. And then as they have less access to it, and the people higher up like determine, the capital that they'll be willing to spend because the risk is less. And so like that mechanism, the way it's there now, like the traditional finance world, it's not incentivized to change, because if you're rich, it's working great for you, right? Like if you're one of the super wealthy that can pay for a congressman, or you can go shopping for political favors, why would you change, right? Like it's working great for you, and it doesn't matter which party you're in, because you're doing awesome and you're not going to have to worry about that. But on the Web3 side, people like me were the early people in to the system, right? And you could call us libertarian nerds or whatever you want to do it. And I've actually since left the Libertarian Party. I just think they'll argue over the definition of something before they'll actually make any change. So just decided maybe we should just part ways and try it ourselves. I haven't give up on the concept of what I think is the part of the solution, which is non-coercion and non-aggression. If you have to force somebody to give you something or to work for you, or to set up an economy where I force you to provide something or make you sell it at a discount when you don't want to, then I'm aggressing against you. We should cut all that stuff out, which means, hey, let's stop funding wars like as much as we are. Like, let's pull things back and give people the ability to decide what they do with their time and where it goes. And I know you're not going to fix that like with a stroke of a pen right away, but if we just orient the world and incentivize it and have people ask for and demand and work towards and invest in a system that returns their ability to direct what happens with their time to a greater degree in their life, you'll start to get a more fair world, some breathing room, and some way to sit there and think. And you take the coercion off the table, and you can even wind up helping some of the people that want a more socialist world where you're sort of laying in a safety net, because you have more people making decisions in a distributed manner. So more dollars are going to flow towards things that they find maybe not economically rewarding, but personally. So it's like, but if you're just having a few people setting up who gets favors, and it's like you guys know the game Plinko on Price is Right, where they drop in a thing and it's like pachinko, you see, and it like bounces around. That's what it is now. And it's just like if you get to be one of those pins that it bounces off of, like you're Mr. Important, but it shouldn't be like that, right? So that's a hierarchical model. Like the way pachinko game works is hierarchy. Where we're building is a peer distribution way of doing it. So you have more, not just access in a peered model, but autonomy, right? Like you can determine where you're going to put your effort into, which part of the graph you're going to build into. You're all working according to the same rules and the same trust model, that you don't have someone at the top shifting the rules of the game as you're playing. So the thing that we're doing wrong right now is we're artificially making it difficult to access the communities. And then the overall problem in Web3 is the UI development to onboard people is so confusing that it alienates like people coming into the system a lot of times. Like, I'll give you one example, and there's probably a bunch of people out here that share this. I have a history of building companies. I've self-taught like AI developer. I've exited 5 different times. I think that I'm a fairly competent person, right? Like I think that I can figure out, you drop me into something. My buddy and I won't say his name because of the difficult time that we had, he is an early product partner manager at Facebook, graduated Carnegie Mellon in 3 years. After Facebook IPO'd, he went to Harvard and got his MBA. It was a really popular NFT based game that everybody was big in the Philippines. Axie, right? So we tried to play Axie, and we were trying to get set up on the game, and it took like a week, and he and I couldn't figure out how to get playing in the game. And I was like, dude, if we can't figure this out, and we're sitting there, we're like trying to figure out how to get in. If we can't figure this out intuitively, like what hope does like somebody who like just learned how to use their cell phone. Like what chance does that person have to access this? And then that pattern didn't disappear. It amplified into the community, and the investors that invested in projects invested in ways to build up like quick fanaticism, but that builds like this exclusionary cultural component where people look down and condescend to the newest members of the community. And you're back to the old RTFM, read the fucking manual. Like it's like that, whatever's in people that makes them feel important for being the first one to climb the tree, like whatever that is in a certain segment of the population, the investment over indexed on those types of builders because they're probably the ones that understood it first, and therefore likely introverted and sort of, you know, non-social or whatever. So you build up the habits of the people who like to build things that only reward people who are in the know and clicky because it makes them feel good and validated or whatever. But we didn't invest in the kind of people who look at like the overall problems of a community and build things that like make their life better and more accessible and fair. And like, I'm not a hypocrite. Like, I understand I have that in me, that thing that I just described, that flaw, but I've fought really hard over my career to be disciplined about like, all right, how do I make this better for people? And then how do I go and build something that makes their life better and makes value and has a self-sustaining value loop, right? And so my contribution to the discussion is we should probably do more of that. And sort of even the people who are closed off and whatever, you can figure out what you didn't do right and take your community and then start building in pieces that amplify how smart that group of people are, but augment it in such a way so that you get the most out of it, right? So I don't think we're stuck. I don't think Web3 is screwed. I don't think anything like that. I just think you look at the early stage, it was a self-limiting set of moves, but the upside of the technology and the amount of people it can reach, and it's not like the current economic system is so awesome and it's working to improve itself that it's actually going the other direction. So we have even more of an opportunity today in shifting the imperative to Web3. We just got to do it. Invest in the ways to fix those things, right? So yeah, I feel pretty good about it.
Yeah, I think that the economic macro things and everything, economy is going exactly how Satoshi expected it. It's just us building on top of the technology that's been presented to us that turned this whole industry into that, yeah, I almost want to call it a pyramid.
I think there's one thing that I bet you Satoshi thought we'd be further along to solving. And I think he thought as the relative value of Bitcoin to $1 increased, and the amount of people using the system increased, I think he probably assumed the incentive to invest in cheaper energy production would be baked into the system. And I think he allowed for the case of potentially maybe there being some stonewalling around like, you know, politics, but the fact that you don't have people using Bitcoin money to lobby for nuclear energy production is it's probably something that he thought like this network's going to need more energy and it should be cheaper. We shouldn't be fighting over a current threshold of energy usage being put into the system. I think the fix is obviously use the value from the network to lobby and break down the political and cultural walls and then make energy like cheaper available. You can literally use the price of Bitcoin to arbitrage that.
The point that you make makes total sense, right? Because the further we go into the life cycle of Bitcoin, the rewards will go down, the mining rewards. So there has to be a solution for the energy that it takes to mine these blocks. Otherwise, there will be no miners left because the cost of energy is going to be more than they actually get. So yeah, it makes total sense. I think that is actually a good direction that could or should be taken, or at least investments should be made to make the energy cheaper. Stefan Godley, I haven't heard you much.
It's obviously a very deeply entrenched discussion on how society could form and elaborate, and having these visionary characters coming in with technical solutions trying to pave away. And then what I'm finding astounding, it always hits off a bit in the same direction, right? And like it seems like we're always repeating mistakes, and it doesn't only happen in Web3. It's like all over the global economics right now, where we see where we ended up, like coming after kind of the world wars into hopefully not the next world war which we face right now. And I think, like, what is, maybe you as a US citizen, and you're much closer to these societal norms, and how you as a kind of primary actor in these markets also behave or give the rulings top down. Like, I always am a bit frustrated around kind of this alienation of the SEC and how they bring in more hurdles, even as you mentioned, to actually make it even more difficult to bring change. What is the reason for that? Like, you being from there, coming all the way with your like bold background, I would just love to have your opinion, like, towards those aspects that some people seem to want to block it off to have something different being established.
I'm going to give you an honest answer, even though I shouldn't, because right now the political climate in the United States is a little bit scary, because you're looking at people in, like, a good segment of the population believes speaking your mind and free speech is untenable, not allowed, non-permissive. One of the great parts of Web3 is its censorship resistance, right? The climate right now is that, hey, you shouldn't have autonomy and you shouldn't have free speech, and actually conformity and consensus is the most important thing. It almost feels like there's two different kinds of people. Like, I'm just saying, it feels like there's people that prefer collectivism and people that prefer individualism, right? So there's that discussion going on right now. As far as the regulation, like, regime on top of everything, one, I think you got a lot of people in finance and in Web3 that definitely did not serve their mission. They didn't go out and do what they said they would do. And essentially, in a lot of cases, that's fraud. And you have some good people. So I'm not one of these people who believe something is either all bad or all good, right? Like, I think that there's good people at the SEC. There's probably good people in Congress. There's good police officers, good teachers, good firefighters. Like, there's good parts of that part of society that are just doing their job, trying to put in an honest day's work and protect people from getting screwed, right? Like, I think, so that's there. And there are people that were out screwing people and not doing what they said they would do. But then when you look at, like, just the way the thing is constructed, like, what is the SEC for? It's to regulate securities, and exchanges. But, it's also to make sure that the game stays in Wall Street, right? Like the United States has no interest in being displaced as the global center of finance. It's like, as much as Dubai develops and Tokyo develops and Singapore develops and, London, it's not like it can't happen without everything that's tied through New York right now, the way that the game is set up, right? And so there's no interest in distributing power away from those systems, because it just rewards the people in the system who are the people that essentially elect and put, like, FINRA is self-regulated, right? So it's the people who are going to keep things concentrated. And you're talking about that model of finance that works off a global standard, that has a LIBOR window, that lends things out at global banks, that lend them down at a higher rate of interest. Like, it rewards early access and a hierarchy. And we're saying, hey, let's replace that with a distributed model, because it does serve the people accessing it more fairly at the bottom better. Like, it and you see the people that hire up, like, he's a great investor, but you hear people like Warren Buffett talking bullshit like, oh, it's a Ponzi scheme. Like, no, like, Bitcoin's not a Ponzi scheme. You're in a Ponzi scheme. You're just you're higher up in the ladder, right? Like, so you bought Wells Fargo during the Lehman Brothers meltdown. Like, you actually stepped in and put up a bunch of money for that. And your banks have a lot of loans and have early access to this money tap. And that's making a bunch of your investments, like, work. So you're playing a Ponzi scheme, and you've just convinced yourself that that's the natural order of things. They use these regulatory agencies to keep people in line and on the reservation. And then anything that goes off and attempts to change it is smacked. Like, you just whack it. And so I think in general, you have this, you have good people all over, like, trying to do the best job they can. But the mission of these things is to keep power aggregated in a hierarchical system. And that's not really how people can fare. Like, it's people have worked in that model for a long time. But if you want to look at like the people who have the least access to the ability of the system to work for them, it doesn't work that well, and it's working less well. And so it's not something that you can stay with. And, you know, I think something's got to change here because there's a lot of tension. So
do you think misaligned incentives are a thing here, like where everything works for the people on top, but not for the people on the bottom? And maybe we can also reflect it to the Web3 space, where a lot of misaligned incentives, in my opinion, are sometimes taking over, helping the people on top and not really funneling through the value to the people at the bottom. What do you think?
Yeah. So I've tried to fix that here with Metafide and what we're doing, right? Like I can talk about the way we've done that specifically, but let me talk generally first, right? Because I don't want to just be one of those idiots that just goes on and plugs your company. But in this specific instance, I think we've addressed it in the way that I'd like to see other people do it. And I hope they just copy the model, right? Like, it's not something we want to keep for ourselves. Everybody should just take this and use it. And it's yours. It's not mine. It just belongs to everybody. I think the misaligned incentives in the current system are power and control and coercive ability, and the fact that you can pile up money with you and your friends, and then that manipulates the money, and you can cause recessions, and so you can short investments, and you can be on the bear side of things when you're fairly poor and you don't have access to a lot of instruments. And so you can basically charge for your labor because you don't have anything else to sell. And what I think the game is set up to do, and this is maybe a skeptical way of looking at it or a cynic way of looking at it, is you take the people who can only sell their labor, and every once in a while you go and push their head underwater and hold it there so that they're thankful that they just get back up to breathe. So every couple of years, like the Austrian School of Economics calls the Austrian business cycle theory. And the concept is, with the manipulation of the money supply, that you can start to predict these windows. I think the way it works for the power interest is you go out, you take large groups of people that have families and are looking at, like, what can I do for my kid? I want to help my family. My dad is old. I got to take one more vacation before I die. Like, I got to see the world. And I just want that one thing to go right. And then hard economic times, and you hold their head underwater to the point where they're struggling. And when they finally pop back up and they're like, can see a path to be able to afford groceries for 6 months, they're just thankful for that world that they live in, which is also, I think, you look at that and it's the human ability and propensity to see gratitude in the world around them and just everyday situations is like a beautiful part of what makes us human. Like, I also think it's what's made people that gravitate towards socialism, like, I don't fault them, because what it does is it takes the better elements of humanity and convinces people that there's a uniform appetite for that. You know, I don't think you can rely on that to such a degree that you can build a system on top of it. But to answer your question, the other question is, like, the way we've tried to look at things here as we build the company is, it's not going to work. If it doesn't work for the common market participant, it doesn't work. So what Metafide does is it combines human signals with AI prediction models. And what it uses, because AI prediction models are informed by the training data that you feed into them. If you have markets that become more and more uncertain, they're driven more and more to such a degree that the variable things that go into that market, such as people making maybe personal or irrational or fear-based decisions, it starts to drift from the predictive capabilities of an algorithm, even if the algorithm is great, because what's missing is the very recent training set of data in the market. And so the market's just going off of what has been executed on the market or placed to, or, you know, your order books that are in process. So the thing that's missing is that, you know, global signal on the best performing people at understanding the market. It's not in there yet. So what we do with our company is we bridge those things and then arbitrage market opportunities for it. So if we know the public believes the 5-minute price of Bitcoin prediction is too high or too low, we can see what we've predicted for it on our AI models and then nudge it, bump it one way or the other. And maybe maybe a lot of people piled into the too hot, like, it should be higher side of the trade, and they were early, and we were like, okay, the range says it's too low on the range, and they say it should be higher, and the prediction price wasn't high enough, that's probably a strong buying signal, and vice versa. And then we just, we're working on now, we've got 50,000 users in those games that we've set up to get that signal. And we have 3 institutional hedge fund partners, and we're just growing both sides of this business. But the idea is it can't just work for the hedge funds. Like, I can't just scalp the market and give to the hedge funds, because that only helps people who already had money, and it doesn't get new people in. But if we reward the people through the ability to get more of our token, and also we have a deflationary token system where we're not just inflating the money supply. There's a fixed set of 5 tokens. Everybody's competing for them, or they can stake them, and there's ways to grow the value. But what we're doing is every 90 days, we go and we buy 5 tokens off the market and burn them as proof that how much the algorithm that we're transacting our own treasury is worth to this. And the same thing we do for the hedge funds, we do exactly the same thing for what we're managing. And so if you're one of these people that believes, hey, if you apply AI to financial markets, it'll be a good outcome. And you don't have to understand how the AI works, or you don't have to be an AI expert yourself. You just have to believe AI applied to financial markets is probably a good thing. I want to share in that. And it's a mechanism for that person to share in the value creation that's applied. So you get some long-term holders. I imagine those people do pretty well for themselves, but it's an experiment, right? So what you're saying is we're doing the things that the higher moneyed, powerful interest in there would do, but we're doing it in a distributed way for you that you can access. And what you give us is your intuition and your signal and your input, and then we reward you disproportionately for being correct about that. So it's a way to include all of these parties in a way that creates value. And what you get as a Web3 founder, investor, whatever, is people look at it and they say, well, I want to be part of that. It convinces people that are like the people in the system and people they know to say, well, I'm going to do that because it's generating value, right? And so I want to share in that. It's you can do it whenever you want. You can give as much time as you want. It's not like you're beholden to it. And there's a value for being associated with it and being correct. So it's as much as you want from it, you can go get it as long as you do the work, which is being correct about which way the asset price is moving. And I think that's a pretty great way to set things up. You're not forcing people. You're not saying get on the clock. And you're just taking the things that people willingly want to give to the system, applying it towards a very valuable problem, and then rewarding people for being a part of that. So my suggestion to everybody is find some piece of that, copy it, and go do it. It's a way to get the next 100 million people into Web3. But it shouldn't be that, and that we've had that conversation now for 4 years. How do you get the next 100 million people in? That should be a solved thing by now if more people did this, because we'd be talking about the next billion people in, right? It's not one of those things. And I think once you get, I think the break point is probably between 1.25 and 1.75 billion people on Web3. But once we get that kind of momentum, we can outcompete the other systems by just making it work better for those people, because you can trace the chain of custody of things in this model. You can align precision and accuracy across a bunch of different mechanisms. If you're doing crypto the way it was intended, you hold your wallet, you hold your keys, and you can be as good as you want and as public as you want, but you can also be as anonymous as you want and retain your privacy. And they can't use that signal against you to make your life harder to do those things that work. So it's a great model. We have some good early ones along the way, but we've started to see a change in the way they look at things. Of they're being more disciplined. They're not just throwing money into something that seems like it's going to pop and then they're going to get out of it and dump it. They're asking the kind of questions of your 3 and 5 year horizons and working with you to build for that. And the more those type of investors move into the space, they invest in projects and they buy into companies that are doing those type of things. As you see them start to succeed, it'll be really important to what comes later into fixing it. But what it does mean is that those of us working in the space now, the stakes are pretty high to get it right. We have this shot to get it working and really make it competitive against the status quo. But it's probably the hardest for people right now because you're sort of crossing the chasm with a limited amount of faith and resources. But there are enough early people who understand the value that it's actually working out for the people that are getting it right.
You mentioned this model and this approach to break this implementation of the false perspective of being in good times and this overflow of information, and actually breaking this and trying to be more inclusive. I think it's a feasible model. I wonder, out of your perspective, like, do you think it's an economic disadvantage for you to do this? Give up on better growth rates, give up on a better P&L doing this model? Or do you think that's actually helping your company to grow faster?
Yeah, I think if you just look at it from a product perspective and how you grow your company, like when you're offering people something cool to do with their time, and then a hedge fund, a really great way to tap into some alpha in the market, like we're actually slowing down the institutional customer growth because we have people lined up like that we have to implement. Everybody wants early access to alpha that you can arbitrage in the market early. But the people, it's just taking an empathetic approach to your customer set and be like, well, what do you want to do? Well, the gamer type wants to spend money or spend their time doing something that makes their next 5 minutes pretty cool. So it's this opportunity to make life better, to communicate with them, to build bridges, and as you get into different customer sets like professional traders or retirement planners, you just have different ways of spending their time to give that signal that makes them happy and gives them feedback and gives them value. So I look at all my product companies, the products across all my companies that I've done, as a way to understand and in some way befriend the user on the other side of that, right? Like I'm working for them. Like they're doing in the aggregate something that I want to get done, but my job is to work for them and be like, all right, well, how do I make your day better? Like you specifically, like Rick or Stefan, right? Like how do I make you interacting with what I'm building better for you? And the more I figure that out, the more that we probably move closer to each other in society, the more that I understand you better, the more I can kind of act not on your behalf, but for you to build things. It's not like I have to do this. I could probably go run an AI product group at one of these big companies and just sit back and reap those benefits of working in those models. And it's hard work, but at the same time, like I could do that. But I look at this opportunity that we have here, it really counts, and you're making a real difference. And you and the people that you're doing it with are electing to go the hard road, but you're going to get if you do it the way I think it should be done, you get to make an opportunity for people that you want to help. And I think we get to do that. Like founders and investors, they should not lose sight of the fact that, when you started in this, at some point you said to yourself, like, this has to happen a different way. Like, it's got to be different. And you get to make that change. It's hard. You go to work every day, you kind of feel like, this being a startup entrepreneur is basically like you're constantly wrong and you fix it fast and you just rinse and repeat. But you should at no point think that going into it, like, I know the answers. Be honest with yourself about the way you go about doing it. And then what do you get to do with it? And the art in the job is to just figure out, like, okay, I can do this, make this better. It's probably not for everybody, but it's such an awesome way to go about things. And we're lucky to be in the spot.
I love the system that you explained of combining AI and the people to then analyze this data to provide it to another source that wants to use it. Am I understanding it correctly? You're using Web3, people give their opinions, they earn by giving their opinions. That data gets used and also can be used by, for example, hedge funds to see what the masses are thinking. Is that like...
It's like actually one machine alliance, right? A bit.
Yeah, a human machine alliance is a great way to say it. There's a couple reasons to do it, but the way it works is the humans nudge the AI predictions one way or the other. We figure out how precise it's projected to be, and then we actually execute the trades on behalf of the hedge fund. So we have the whole pipeline all the way through. We own it from end to end, and we execute the trades, and the hedge funds just put up a pool that we transact it for them. So the product is already there. They don't need to analyze the data. It's just our algorithm is constantly tuning and executing trades. I think that's an important part of maybe where Web3 is at right now, because sometimes you might need to build something all the way through and go the extra mile. all the plumbing's not hooked up yet. All the circuitry is not plugged in. And so you just got to be kind of resourceful and find these models where you can predict and control the flow of value creation all the way through. And then, as people outcompete you in certain spots, open it up and grow the business with them. So when there's better execution facilities, and we're talking to those kind of folks that execute for you, like we'll send the trade-off to be executed by an execution partner, right? So like there's all kinds of opportunity.
Okay. In our previous conversation that we had before this call, you mentioned an earlier venture where I think it's related to cookies, but let's not call it cookies, where you were able to collect a lot of data very early. And if I remember correctly, there was also a way that you could use this data to make certain investment decisions because you knew how the masses were thinking. Is this what inspired you to build Metafide? How do I say it?
Yeah,
And maybe
yeah.
also, can you give us some more insights in how that made formed you as an investor itself? Because I think that's some super valuable info. You say you were in Bitcoin since 2010, so I think all of these experiences you had probably also made it easier for you to understand what is Bitcoin and how can this be valuable. Is this all intertwined? Um, can you share us like a little story about that period of time, because it's super exciting to me.
Yeah. So early on in the social media revolution, you had a bunch of people saying like, let's build brand tools. Like, let's go build brand campaign tools and things. And my co-founder, Mike Perone, and I, who's current founder of Social Sign-In, we looked at that and said, nobody wants to be friends with laundry detergent. Like, that's dumb. Like, I don't want to be friends with my toothpaste. Like, I don't want to talk to you more. I don't want to know more stuff about you. I know everything I need to know about what's in my pantry. So it's like, I don't want to go down that route. But what we did realize is like, social is about a massive peer distribution of ideas. And the source of a lot of ideas, or the discussion around comparative ideas, comes from the media. So while everybody was going out and stacking up ad agencies and whatever, we went out and put on New York Times, Washington Post, Al Jazeera, BBC, Associated Press, Reuters. Like we just went out and got all of the media, like literally at some point, pretty much all the media. Like we've had Breitbart and Mother Jones on. We've had like the White House and WikiLeaks on at the same time. And all of the links go through our link shortener. So we had first party cookies to every topic that the news thought was important, pretty much anywhere in the world. And what we were able to do, we were the good guys about it. We didn't behaviorally target people. We didn't go after like demographic information on people. All we did was understand the value of concepts and then map them to things like location, or predicted the dollar value of them. And we predicted Brexit exactly on the vote split. Like we were able to segment that vote. And when everybody's like, oh, they're going to stay, I told people 3 months before that happened, I was like, they're going to leave. Like, they're definitely leaving. They're going to vote to leave. And people didn't believe me. But then when the election came around, the 2016 election with Trump, when 538 was calling it 80-20 in favor of Clinton, I actually had somebody call our press contact, and they were like, well, what do you guys think about this? You've given opinions on how important the individual candidate's messaging was. Do you guys have any insight? And I was like, yeah, if they had it's not 80-20. If they had the election today, Clinton probably wins by half a point. And she probably doesn't get all the way there on the electoral college, right? And then, people came back to us and asked us to do it. So what we did that night is we worked on this up to it. But the night of the election, I sat with our dev team at Reuters in Times Square in New York in their main conference room. And they just kept sending reporters in and out and getting updated results. What we did is we took concepts and mapped them to every voting district in the United States. And we were able to predict which way they were going to go, and also find people that they hadn't polled yet. Because we saw people clicking stories that were around political content that that session cookie hadn't that cookie itself hadn't clicked any political stories in the 18 months prior. And once they lit up, it was like, oh, this person is probably a conservative or Trump voter. Like, how are they going to convert? And then we just ran a bunch of models as to whether or not we could predict they would go to the polls. And I won't talk about specifically like the methodology that we use to compute that, but it was very accurate. We wound up missing, I think, like 4 counties in Ohio. In the entire country, we got the rest of it correct. I left the office at 2 a.m. and got in a cab, and I'd stayed in New York that night. I lived in Connecticut, so I didn't go back. I just went over and like crashed because I knew, and I didn't get up early and go to the office. I just got up and, you know, like my regular time and walked to the office because I knew when I got in, like I knew which way I was going to go. So it's like you can use the data in really interesting orthogonal way. Like you can use it in ways that aren't readily available. And I think in Web3, one of the things that you can use the data for is not just to understand the value of the assets in the system, but the comparative value to the assets not in the system, especially as the real world asset movement gets going. And you can start to realize what's better in the Web3 version. And then as soon as that becomes like readily available and accessible, you can use it to short and arbitrage opportunities outside of the system, which sort of furthers the flywheel. And I know I'm not probably making a lot of friends in the traditional finance space by pointing it out, but like that's just the way it's going to go. And I hope the more, you know, I'm an American, so I hope as many Americans can benefit from this as possible. But I also like free people. I hope anywhere there's free people in the world that think for themselves, I hope you get access to that benefit too early. And I hope that by making good decisions, you can access a system that rewards you to a greater degree because you're going to go and make more fair decisions on the way you deploy your capital on the other side. And hopefully, when this thing tips over, we can realign the decision making in the hands of the people who value fairness and, you know, sort of that model of exchange.
Impressive. I think it's truly impressive, like how you think and approach differently. And I wish there was more characters like you out there who actually take this role model. And obviously, there is a bit of a waking up sentiment, and I think more and more people will look into this role model example. So I can't actually wait how this will unfold the next generation, and hopefully, you know, like these strong control mechanisms are not strong enough to be broken up. It just takes effort, and going ahead as a pioneer needs a bit of bravery, but I think you're doing a very, very good job.
You can't stop people once they wake up. You either got to kill them or they're going to get through. We don't plan on going anywhere, so it's only leaves one option, right? There's a bunch of us out there, so we're going to do.
Maybe last question or last topic to tap into is I hear some people say that AI and Web3 is kind of a meme. It's like you take 2 buzzwords and yes, it works because of hype. Price goes up because of hype. You are building AI and Web3 tool, an AI and Web3 tool, right? Is trading the only way that AI can be applied to Web3 right now? Or do you see the AI space and Web3 evolving together?
I'll give you a really clear example on why it's not, right? So we spoke about earlier, the value of AI is conditioned upon the training models that go into it, right? The reason why Web3 exists is the current, name one institution that you trust more now than you did 20 years ago. Can you give any example? Like, what is it? The church? Is it the government? Any bank? Like, just pick one. If you can find one, like, let me know. You know, maybe the NBA, right, or something like that. But since that institutional trust is degrading, right, and the fact that training models are only as good as what goes into them, and the institutions are deciding the vector of the training models, if we don't apply Web3 to AI, we're going to be deliberately misserved. If you cannot trace what goes into a model and you can't verify it, and they're not willing to make it public at some point to some degree, and you're not tracing the chain of custody of that information, like, you're not using the best case of Web3, and you're not doing the good job by people. So what you're going to get is an AI system that doesn't necessarily have the right thoughts or the right capability to train itself. And it's going to come up with conclusions that don't serve what's fair and just. If the people telling it what to do don't have fairness in mind, and institutions are not currently incentivized for fairness, if you don't use the one technology in our toolkit to introduce some fairness, you're just a slave to the things that you know. right? So, and if you're not fair about what goes in, then you're just subservient to the things that were fed to you, right? And so, like, there's no check on that if you don't introduce a custody mechanism into the process. So we're already way late on asking and demanding that Web3 be integrated in the AI side of things.
I think we touched on everything. I think this was a great conversation. Is there anything else that you want to add? Please tell us. Otherwise, we can move to closing.
I would just say for all the founders and investors out there, like, let's work on building something that adds value for everybody in it. Like, let's get away from these stupid meme tokens. Like, they're just ridiculous. Like, let's move off of the temporary quick hit, quick fix things, and let's build a world that's sort of just going to serve everybody better, right? So wake up every day and you get to do that. What's cooler than that, right? So let's all work together. I appreciate you helping get the message out and connecting people. You guys are doing a great job, and I really appreciate you guys having me on. It's been great. Thanks for the questions and the process leading up to this. I really appreciate it.
Yeah, there's quite some other things that we want to talk about actually with you, because we had this earlier conversation and there was many things we discussed, like even VCs, why they are not really working, or valuations in the space. But I think this episode was great. We got a good picture of you and also how AI and crypto can be formed together. But also we touched on economy, we touched on politics. So I think this is a great episode with some interesting topics. We would love to have you on another time to talk about the flaws in the VC landscape and the valuations, and then what's the problem there, because I think you have some great takes on that as well. But we'll save that for another time. Frank, really appreciate you coming on and sharing all your knowledge. Stefan, thanks for being here again, being the founder's wingman. And yeah, thank you very much. And thank you to the audience. Make sure to follow Frank, go and follow Metafide. Tell me one more time. How do I say it?
It's Metafide, and it's Fide
Metafide.
_AI on X. And I'm just F Speiser on everywhere. So
voila. Fide _AI and F Speiser on X. Thanks everyone for listening. Thanks Frank. Thanks Stefan. And see you next week. Bye-bye.